All right, everyone. It's about 3:03, so we're going to get started. Welcome to this Paycheck Protection Program What Next webinar from the Northwest Illinois Economic Development. I'm Emily Legal, Northwest Illinois Economic Development Executive Director, and it's my pleasure to have you all here today. I'd like to begin by introducing our presenter, Bill Jahnke. Bill is the Northwest Illinois Economic Development Board Chair. He's also the chair of the area port district, and he's a serial entrepreneur and has graciously agreed to walk you through some of the Paycheck Protection Program overview. Just a quick note, this webinar will be recorded, so if you don't want yourself on a recording, please turn off your camera, turn on your microphone, and put your questions in the chat. Otherwise, by staying on this, we are assuming that we can share this webinar with other folks who could use it. This webinar will be posted to the Northwest Illinois Economic Development Facebook and YouTube pages within 24 hours of the recording. And if you would like a copy of this recording, please reach out to me via email, and I will send you the link once it is up. So I'm going to start by sharing the screen for the PowerPoint, and I will let Bill take it from here. All right. Did not mean to do that. All right, Bill, take it away.
Okay. Well, thank you everybody for attending. This is the intent of this is to provide some basic overview and to discuss some of the pitfalls that you want to avoid and other things. What is happening is the SBA is continuing every few days. They're putting out finer points on the program, so they have been making some changes as they go. So I think the last update I got was from the 5th, and that one is actually posted to NWILED's website. So that, and you can see it online as well. We thought it'd be easier just to put it there. Why don't we go ahead to the next screen, Emily? And you can disappear the screens on the left side if you want.
I'm doing my best. I'm not that.
If you can't, you can't.
Yeah. Oh wait.
Just click on the next one.
Okay. If you do want to access this, oh, okay. Next slide. Cool.
Yeah.
Okay, you're there, Bill.
I'm not. It's still the original initial slide still up on screen.
Oh, I don't know why it didn't share on your end. It shared on my end.
No. I kind of need to see it.
Let me stop the share and reshare it.
Okay. Because if I'm not seeing it, there's a chance nobody else is seeing it either.
Okay, what do you see now?
Okay, now we're into the overview.
Awesome.
Okay. Going down the slide, many businesses have already received their PPP monies. Are any of the people on this webinar still waiting to receive their money? Or has everybody gotten money?
I'll be getting ours for Honest John's this week.
Okay. One of the things that you may want to look at is the second point on the PowerPoint here. If you haven't received your monies yet deposited into your account, you should possibly work with your lender and plan to have the funds dispersed into your account on the first day of your next payroll period. It makes it easier for you to, instead of having to proportionate payrolls, especially if you use an outside service, it's easier to have it so it ties in with that. And once your lender does receive the money, they have up to 10 days to actually fund you into your account. So from a bookkeeping standpoint, it makes it a little bit easier instead of having to say, well, we had 3 days on this payroll period and 4 days on this payroll period, or however you apportion it out. Why don't we do next slide, Emily?
Okay.
I think everybody knows that at least 75% of the loan must be used for payroll costs. You can actually use more of it, but if you use less than the amount of that 75% that you actually calculated when you received your gross loan total, your amount of forgiveness is going to be reduced. And so some of that further information is on the website. But for instance, if you only bring back or only have payroll that totals 80% of what you had of the 75% that you had initially applied for, you will have a 20% reduction in your the amount of forgiveness. And so, again, the whole program was based around the ability for businesses to bring literally as many employees as possible back so it reduced the unemployment burden on both the state and the federal government. The interesting dichotomy of that is even though the 8-week period in which the loan and the forgiveness starts on the day of your disbursement, the problem is here in the state of Illinois, the governor's still got a lot of businesses shut down. So it's a difficult thing to say, now I've got the money to start paying people, but if I bring them back, what am I going to have them do because we can't be open for business? So that's another matter. Sometimes it's best to bring people back and do cleaning and do whatever you can because it's free payroll money. Up to 25% can be used for non-payroll expenses. That's your rent, mortgage interest, utilities, and any other items as identified by the SBA and the Department of Treasury. Those are the things there that I think everybody's taken a hard look at, because right now the SBA seems to be modifying the program little by little. There have been discussions to extend the 8-week period beyond 8 weeks, maybe to 10 weeks or something. But for right now, it's 8 weeks and only the maximum 25% can be used for those other expenses. Now, most everybody that's on this call, I rather doubt anybody has received in excess of $1 million. The Treasury and the SBA have come out and said they will not be auditing any of the disbursements below a certain threshold. Initially, it was $4 million into, and then I think I saw in Barron's yesterday or day before that they were down to about $1 million threshold. So if you are a business that has received less than that high level, you are not going to be audited by any of the entities. But it will be up to your lending institution because they have to meet certain underwriting standards. The primary audit point that the Treasury and the SBA are going to be looking at is the need for the loan. In other words, the loans were taken out as almost a last course, last chance, where somebody did not have the availability of going to a bank and receiving a loan. And part of your application had that certification. So it's good that the small loan recipients won't be audited for that. And most everything you're going to have to do is work with your lending institution to fulfill all their requirements for the application for the forgiveness on the PPP loan. Now, one of the things you don't want to do is get it so that you can run, you probably don't want to apply before the end of June, into probably first part of July. Because when you also have, let's flip to the next screen, Emily, I think it picks it up. What happens is, this goes into, initially in this first point, I had loans under $4 million and they've revised that down since. But one of the things that they are looking for is they want to employ people. But also, if you have a lesser number of people employed, say you initially had 12 people on the payroll and you've only brought back 8 people. At that point there, your full-time equivalents, which is number 2 item up on the screen, would be less, and that would reduce the level of forgivability. Emily, go back up one screen if you would. I think there's something I wanted to pick up. Okay, on that bottom thing, the expenses that fall into the 25% category. When you're making those loan forgiveness points for the forgiveness of the rent, of the mortgage interest, of utilities, all those applicable expenses under that 25% cap, you have to make sure that in your accounting, you are not also writing those off as an expense and essentially double dipping. What you'll be doing is you'll be netting the forgiveness against those costs. So you can't get reimbursed for those costs plus take the additional write-up. So just make sure that in your accounting and with your accounting entity, if you use an outside company, that you're not doing a double dip, because that's something that can get the underwriting with the bank messed up. So let's jump to the next slide, Emily. We're looking at the amount that you're going to pay your people. So your forgiveness can be reduced by the total number of employees that you have on the payroll compared to the base periods. It can be the total amount of wages brought back, but it also can be if you bring in an employee back and you're only paying them, you're paying them less than 75% of what they made before. That also reduces the amount of forgiveness. Now, one of the things that they came up in the article that was a question initially is, say I had my original 12 people, but then as I went to bring them back, because of the way it's structured between the state of Illinois and the federal government, they're actually making more on unemployment with the $600 a week federal unemployment benefit than what I was paying them. So maybe you're reaching out and getting new employees. Well, those new employees continue to pay them, and it will come down to total wages. So there is not a restriction on having to hire the prior people back, as long as you do make the effort to provide them the job, generally at the same terms and benefits they had before they were either laid off or furloughed. And so just keep track of that. But you can add new people in, and those wages still count towards the forgiveness of wages. Why don't we jump to the next one, Emily? Some people are looking at this. I know a couple of businesses that went ahead into the PPP, knowing full well that they would not be able to achieve the entire forgiveness of the loan. And I know one of them that went in and said, I'm not going to be able to probably forgive more than 30% of this. But what it provided was an opportunity to get a loan that had no collateral, no requirement, had no personal guarantee, was for 2 years, and was an interest rate of 1% with a deferred initial payment for 6 months. So they looked at it strictly from the aspect of it's cheap money that I can then use to buy materials, to take on additional services, to do whatever's necessary to spur my business on. Now, many of the people, when I was talking to, I've talked to the mayor of Savannah, the head of economic development up in Galena, and I think the biggest concern is a lot of the businesses up there are really stressed at the moment. I know in the previous Zoom meetings we've had, a couple people have expressed that. The concern is most businesses, say in the Galena area, and I'm picking on that only because it is the premier tourist destination in the Joe Davies and Carroll County area that attracts the greatest number of people, is most of the businesses there have come away from a November through sometime in April almost shut down of literally no business, with tourism dropping off. And so now they're all ready to go back to business sometime around April 1st. And now they're delayed by literally April and May. And I heard today that the governor may even keep things moving to the next step until June 15th, which is a further burden. And so sometimes if you're not using the money for the payroll, this loan at 1% interest can provide a little help in carrying costs to allow you to get over that hump and get back into the business for the remaining of the year, at which point it does open.
Hey,
Emily,
Bill.
next.
Can you
Yes,
pause a second for a couple of questions that I'm seeing?
absolutely.
So Dustin, sorry, Goldmore Inn says, can you apply the payroll costs that you have already paid prior to disbursement? Can you claim that?
No, everything, your PPP forgiveness and the loan is as of the date of disbursement. So that's why I'm saying if you can tie that day of disbursement out to the first day of your payroll period, it makes the prove up a lot easier. But you can't go back and retroactively do something. It's only for payroll. It's everything that starts, I believe, at that point. If you look at the stuff online, the full SBA explanation is there, but all your forgiveness basically happens in the 8-week period from when you get it, and I think it'll carry through the end of June if necessary.
Thank you. And then Deb says, how many days do you have to bring people back to work from the date of you received your loan?
You are obviously, the best bet is to bring them back as soon as possible. You want to get those people back as soon as possible, because the more you delay, the more you're going to delay incurring those costs that are forgivable.
And then Rick says, what if the check was cut before disbursement but wasn't cashed until after?
Most people are getting direct deposits right into their account. I'm not sure. I thought most everything was electronic transfer through your lending institution. Are you saying that one of the lending institutions is actually cutting checks?
So Rick, can
Most
you
of the time, it's a direct deposit into your account by the lending
no,
institution.
basically, I think what Rick said, Rick, can you just speak up and state your question, unmute yourself?
Sure. So we're on a 2-week cycle, and we cut checks to our employees, and the checks were cut before we got our disbursement from the bank, but they cashed their checks after we got disbursement from the bank.
Boy, that's kind of a narrow range. I think what they do, Rick, is they look at the payroll periods. In other words, the payroll period for which you paid them was prior to the receipt of your funding, correct?
Yes.
You feel so. My guess is that the payroll period, because it happened prior to, you would not be able to write that off. And consequently, on the tail end, as your payroll period ends, and then you're cutting the check a few days afterwards, it is the payroll period that is going to be the identifying factor for getting the forgiveness.
Okay.
And what you can do is just check with your lending institutions, say, because they will probably want to know the payroll periods and when the check was cut. But I believe everything, it's for the actual time that you hired those people after receipt or the day upon receipt of the monies.
Thank you.
Robin asks, what if an employee declines to come back due to shelter in place?
There is an interesting question because you have two unemployments. You have the federal unemployment at the 600, and then you have the state of Illinois unemployment. Now, the state of Illinois unemployment, most time when everybody does go on unemployment, you have the opportunity to contest that unemployment status. And most of those are already up. If those people have been laid off for the last 3 weeks or so, then that's up. But what you can do is you can send notice through to the Illinois Department of Unemployment that this particular individual, Social Security number such and such, was given an opportunity to return to work and has refused, and that they were given an opportunity to return to work under the same basic terms and conditions, same hours, same pay, same benefits as they had experienced prior to the layoff. So you could send notice into them. Chances are they aren't going to do much because they're up to their butts in alligators, so to speak, at the moment. But what you will have a secondary chance is that when you get into the wage charge potentially against your account. At that point, you can contest it and bring that information to bring it to your not a chargeable employer, which is the other issue that hasn't been fully worked out yet. And that is any of these employees that are on unemployment now, the employer will be the chargeable employer, which will go into the formula that's generated in November of every year to give you your tax rate, the unemployment tax rate for the following year. And so it has not been fully worked out yet whether all these people that have been laid off or furloughed because of the coronavirus, that those unemployment benefits are going to be charged to the employer. Knowing that the tax that this is taking on the state of Illinois unemployment fund, you can better believe they're going to fight to have everything charged to the employer, because obviously if it gets charged to you, you have 12 quarters of 3 years to work those claims off to reduce your rates. So it's a touchy situation that isn't fully been vetted out yet.
One other thing I'm seeing, Robin, is if you offer the employee back their job in writing, they must decline in writing and it shouldn't count against you. This was from a Chamber of Commerce Foundation
Okay.
webinar that I attended last week. Any other
Perfect.
questions before we move on? Sorry? Can you repeat that? All right. Let's move on to the next. We finished this slide?
Yep, this slide's good. So that's pretty much it. Yeah, let's bring everybody back up. Emily.
Awesome. 1 second. This technology is, I'm
Again,
still working on it.
the whole point of this was to broad overview, put a few cautionary areas in, areas for you to look at to make sure you don't hit the pitfalls of not bringing back enough people, not paying enough in wages, the time frames, things that could reduce the amount of forgiveness. Again, the goal on this is to get as much forgiveness as possible. And if you're not able to, congratulations, you got yourself a 1% loan for 2 years.
Bill, do you think we'd be able to go through like a sample PPP from the calculator that you sent and we posted?
I didn't set that up, Emily.
Okay.
I didn't prepare for that. But again, we could do that as a secondary event, maybe, because most of that is going to start coming into play probably 6 to 8 weeks down the road. And maybe at that time would be a good time to get in and use that. The other thing is we have that online calculator. It's courtesy of a law group that put together. It's very nice. But remember that your lending institution, you've got to check with them to see what their requirements are, because they are the underwriter. And if there are any issues in the underwriting and they make a mistake, they can actually bear liability, particularly if the person being granted the money defaults on the money at any point between now and the 2-year period of time. They will go back to the lender and they will check all their underwriting and make sure they dotted all their T's or dotted their I's and crossed their T's to make sure they're correct in everything they did. And so you've got to double check with your lender, because not all lenders are going to have the exact same paperwork and formula for this forgiveness. And I know in talking to 1 or 2, they're still working out what they're going to need, because this is all new. It's something that has not been done previously. So it's still on the learning curve. And we've also got, as I said before, we've got to watch the SBA and the Treasury Department, because they every time they do this, they put the rules in place as of a certain date. And then you go to the next one and they're making little changes. And so a lot of it, Congress is pushing them to become more lax on to be able to assure that people have a higher forgiveness level. And there's a lot of different ideas being kicked around, but as of right now, the current 5.5, I believe, is the latest update they have relative to all the terms, conditions, forgiveness levels, etc.
Any,
Bill, what
Go
is the criteria, the 25 of other, is the date also the same from funding, or can it be prior?
Well, I think you're going to have to probably prorate, because if you're getting money in the middle of the month, you're going to have to prorate those expenses. But it's those expenses incurred during that 8-week period. And so that's your rent, that's mortgage interest, that is utilities. Now, one of the things they did not identify, and it's still a question out there, are they going to let you write off a portion of your real estate taxes? But real estate taxes are not something that they've currently identified in the forgivable column, so to speak.
all right, we have another question from Deb. Is there a time limit on how long you wait to use the funds?
Actually, you can put that money into your account and let it sit there and use literally none of it for the PPP or for the wages or salaries or those type of things, or for utilities, and it rolls over into a loan. But obviously, you want to use it as much as you can, as fast as you can, because you want to ensure to get as much forgiveness as possible. And again, it becomes an issue relative to employees. Can you bring all these employees back if you can't be open for business? And it's just, it's kind of a mess that the left hand doesn't really know what the right hand's doing. They threw this out there with the overall intent of keeping people off the unemployment rolls.
And then Elena asks a question about the number of employees versus wage amounts. Elena, do you want to?
Yeah, sorry, I couldn't figure out how to type it out, so I just asked it. So I know the amount of forgiveness is based on the amount of wages that you actually use based on what you had on your application, but that it also ties into that FTE, full-time employees. What if because obviously we're non-essential, so we can't bring all 18 of our employees back in the building because that would be too many interactions. So we have a lot less employees here, but those employees are working, people who were working 20 hours are turning around and working 40 hours. Is that going to be held against me in the percentage of forgiveness because I won't have as many people as long as they're working the hours?
Well, if you look at the FTE requirements, and again, you can go to our website has the latest on the rules by the Treasury and by the SBA. They do look at the full-time, well, it goes into full-time equivalents. So there's an hourly calculator in there. So you might be able to find that you have some of that. That's actually not the one, Emily. It would be the other one, the other document.
FAQ?
Yes.
Okay.
Yeah, if you pull that one up. Yeah, we won't go into the whole thing, but if you go down there in that, if you go to the top of that document, it says as of, where is it?
As of May 5th.
Yeah, this is published by the SBA. And so this goes into a lot of those things. The other thing they have is they have a recapture point that comes into the end of June. In other words, if you say, yeah, I did bring more people on, but it's potentially after the PPP 8-week period, you can still certify that you had a higher number of people employed than you did actually during the PPP period.
Trying to find.
Yeah, I don't have it printed out here. I'd have to pull it up just like you're doing.
When does the page?
Go back, I think you went, go back up. Shoot.
We're getting into federal.
Emily, why don't we take these questions and then we can do a little further follow-up on them and then
Okay.
respond to the individual people, whoever asked the question, and give them more, or post, maybe we'll put up the FAQ and highlight those items in that document.
Yeah.
Make it easier for everybody to see.
Okay, we can add this to the FAQs at the end. Just give me 1 second to
Okay.
find a working pen. All Okay, FAQ. And I'm recording this so I can find this.
Okay.
Someone anonymously says, I'm self-employed. How do I document my wages?
Well, there is a special provision in the PPP. Oh, somebody want to mute something there. There is
There's
a
me.
Steve acknowledged.
I'm back.
There is a special provision for lost profits by the self-employed in the CARES Act. And in the FAQs that the SBA put out, there is an addressing for that. Again, I didn't know how many people that would affect, so I didn't really put something together to address that. But look at the FAQs and look at the CARES Act. There is a provision in there that you can address lost profits. One of the problems I think a lot of people have is this time of the year in the service type industry or in the Galena tourism type industry, there probably aren't a lot of profits to be had in this first month or so that everybody is open. I don't think most of the profits for most of the people probably come into June, July, August, and then finishing up in October with a decline in the November through April time period.
FYI, Bill, a majority of the participants are from Galena businesses, so.
Yeah, I figured as much.
Yeah.
Again, this is the group here that is most at risk and in most in need of this program.
Bill, I have a question. The American Hotel Association is very much lobbying in Congress to change the rules for this PPP, and the rules to be changed that the split is 50-50 rather than 75-25, and to change the time frame potentially all the way up to December because of the fact that we are all locked down and no business are open. So what do you see in terms of chance that that is happening?
There are a number of things that are all being proposed at this time. And from everything I've been able to read, it's saying, yeah, there's a lot of ideas floating around. However, as of like the May 5th sheet that we published, that's the current rule. But they also do say that all these rules are in flux. And you never know. Next week, something could change. The week after, something could change. This thing, in certain ways, was not thought out well because there were a lot of companies that got $4, $5, $10 million out of it. It wasn't intended for those companies. And there's a lot of big ones that have given it back. But this whole thing is, all we can do is deal with the information that they're publishing and updating as of certain dates because chances are it's going to change. And obviously, when the pressures are put on the politicians, they bring those pressures back around into the intergovernmental circles, and that falls into Treasury and the SBA, and squeaky wheel can get the grease. So yeah, I know they are, and I mentioned that before, they're looking at extending the payroll period out further to give people more opportunity just because they're seeing here in Illinois, California, Washington State, Oregon, Colorado, they're all facing longer term shutdowns than say Indiana, which is opening now, Georgia is opening, Texas is opening, Florida is opening. So there's quite a few states that are already starting to open back up, but we are unfortunately one of the states that's not following that model, even though our statistical analysis for Carroll and Joe Davies County is so low, they've got us lumped in with Rockford for our territory. And so basically it's what's good for Rockford's good for us, and we know that's not the case.
Mm-hmm.
The other thing that's going to be happening, and that is going to be happening on, I believe, Thursday of this week, there's the court hearing in Rockford. And that's the representative that filed suit against Pritzker on behalf of all the citizens, basically claiming he did not have the power under the emergency powers, that he only had 30 days. And that's where the representative in Southern Illinois got the decision that the governor had overstepped his bounds and that will, but it only gave him a win. It didn't apply to anybody else. And of course, our Attorney General, Kwame Raimul, is appealing that, of course, but it'll be curious to see what happens on Thursday, if that will do anything further to, maybe change things politically and soften our blow a little bit.
Yeah.
So I think that's about all we had for today to give you an update on where things are at. Keep an eye on the SBA website for their current rules, because they are changing them. And you don't know when something's going to change, when it's going to take effect. But all we can do is hope. But for right now, get your money, start spending it, move towards as much forgivable as possible, and have the opportunity for a low interest loan with the balance of the money for a period of 2 years with a 6-month deferment to the first payment. Cheap money.
Thank you all for joining us today. Again, the recording of this will be available via email. I'll be following up with Elena and Charlotte, and I'll also make a list of the FAQs once we have the recording taken care of, and that'll be up on Northwest Illinois Economic Development social media tomorrow. If you would like a copy of this recording or any of the links that we've talked about today, please reach out to our office. Otherwise, I hope you have a wonderful day, and if you have any other questions, please let us know. Thank you.
Thanks, everybody.
Thanks.